What's going on, everybody? So I took a long on the Euro JPY today, and the reason I took it is it was a very clean setup. So let's go through it real quick.
So this is the Euro JPY trade that I'm in. I'm long due to the reason that we formed this 4-hour structure, this four-hour H4 zone or resistance. So you can see it right here: resistance, resistance, resistance. Breaks above, retest, and I get this solid 4-hour close. It was not a 4-hour close when I entered it. I triggered in off of an hourly close at 11 a.m. It's 2:41 p.m. And it was almost. This was an inside candle on the 4-hour, but it was more so of a bullish reversal candle on this hourly. So you can see it's great H4 resistance, and this is an ideal trade. This is a trade that you have to take every time. If you get a setup like this, you take the trade. Unless there's like extremely high impact news that's about to hit. So you can see my resistances. I break above it. I get good time and space. I retest, and I really dip through the zone. And then we get that beautiful bullish candle. And so the other aspect of this trade was that weekly level. So we had confluence with the weekly level. You can see it's kind of looking weak here right now. The price action is looking weak, like we may get a pullback and then it bounced. But I think from my experience, if you get a bullish candle like this, don't wait for a pullback. Just enter right on the tip of it on the hourly. You've still got a great risk reward. So my final target is basically we've cleared all these highs. We're making new highs. We've closed above weekly. We've bullish engulfing candle. Not exactly bullish engulfing, but a bullish reversal or continuation in this case candle. Right above those highs. Price is closing back above the highs. My end goal is to take this up to the monthly level. I'd love to take this up to monthly resistance. That's about a 4R. You can see that right there, 4R. But my stops are right below the lows. So tight stops. They're not unreasonably tight, but they're tight, and for my standards. Yeah, so we'll just see what this thing does. It could pull back right now, and then still a valid setup. You know, even if we come back and retest this weekly. But that's the thing. That is the thing, guys, is we're now in profit. Are you going to cut your trade because this thing pulls back? And I'm going to go from being in profit $55 to down like, I don't know, $125, just like halfway to my stop. I'm on a $25,000 account, so if if I get stopped out, I'm going to lose about $250. And I'm okay with that. I mean, this is such a good setup that you're willing to risk that $250. And I learned from this great video, great book, Trading in the Zone. I do not remember the author, but I highly recommend it. Trading in the Zone discusses this. You can place a stop loss. You can still not have accepted the risk. And so I think that is a key, is I have accepted the risk in my mind. If price starts closing above, as long as it's staying above this weekly, I'm okay with the risk associated with that. If price gives me a hard close back below this level, a hard close of the candle, then I might cut it slightly early. I'll lose like 0.8%, 80 basis points, and that's okay. That's just part of the trade. But let's see if this thing will take off. That'll be exciting.
So now that you've seen how I entered the setup and why I entered the setup, I also wanted to cover high impact news. So high impact news came out today, or was supposed to come out at 10:30 according to Forex Factory, which is the calendar that I use to filter through to get to the crucial news. So I'm trying to filter through just the low level news. I have no interest in low level news, but the higher level high impact news is crucial, because if you are lining up and entering into a setup lined up with the release of high impact news, you do not want to do that. You'd rather wait for the high impact news to pass in reality, because when price is around your stop loss area and you have something that could potentially shake the market, then you want to avoid that, because you'd like structure to stay intact. You don't want any erratic behavior going on in the market. Now, if your trade is already further in profit and high impact news is coming out, because we could be in trade for days or weeks even, just continuing to let partial positions ride through trend, you will live through high impact news. and it's further away from your stop. The structure of the market's already intact. And so I think it's okay to stay in during high impact news when you have enough space between you and your stop loss, or you have already mitigated risk by taking profits, moving stops to break even. That's a different situation. But with the Australian dollar today versus the Canadian dollar, I wanted to take a long, but there was high impact news for the Canadian dollar, so I avoided it. High impact news demolished my Australian dollar Canadian dollar trade last week, which was in great profit. I had already taken 33% off the position. I had moved stops to break even and ended up coming out with about 0.36% profit, something of that sort. But really demolished the trade. It was in a great trend. So just two things to think about. Finding trades that are just in clean and very apparent structure as we reviewed for Euro JPY, and then really monitoring high impact news, not trading on the behalf of high impact news, but actually trying to avoid it because I just want clean market structure. So I hope you all have a great day of trading. Hey, we're in my trading office right now. I am in the zone. It feels good, and it's hot as heck in Florida, so I have no real interest in going outside today. Maybe my dog, who's awesome, who's part of the thumbnails of my videos. Maybe he'll get to take a walk like this evening when it's not scorching hot outside. But hey, y'all have a great day. Good luck with your trading, and let's make some money.